Good afternoon, everyone, and welcome to today's Audit Committee meeting. People interested in participating in this meeting could register online using the delegation registration form at www.kitchener.ca/delegation or via email at delegation@kitchener.ca. Any written comments that were received prior to the commencement of this meeting have been circulated to Council and will form part of the public record. The meeting live streamed and archived videos are available at www.kitchener.ca/watchnow. We have a couple of items a few items on today's agenda. The first one is our external audit planning report for 2023, and I guess I'll welcome Matt Beddick and Courtney Cheel. I always get this wrong. Is it Cheel or Cheel? Cheel, okay. From KPMG. And along with them, to answer any questions after the presentation, we have Greg Damasio, Katie Fisher, Ryan Hagee, and of course, our illustrious CFO, Jonathan Lautenbach. So with that, I guess Matt and Courtney, welcome. Oh, so, you know what, I did forget to ask, are there any disclosures of pecuniary interest? No, there aren't any. Okay, now back to you guys.
Thank you. And appreciate the introduction. As introduced, my name is Matt Beddick. I'm the lead audit partner from KPMG for the City of Kitchener. And with me is Courtney Cheel, the senior manager on the account. Will we be working the slides? Do we have control? Yeah, can you advance it to the front of the presentation? This is the last page. If we all want to be done. All right, great, thanks. So we'll take a few minutes to walk through. Typically, our process here would be to walk through the presentation and then be available for any questions, which we will do shortly. So we'll take the material as read, but we will highlight some things that we're either required to disclose and discuss with committee based on our professional standards, or other things that we think are important that the committee should be aware of. So I'll move through the concept of materiality, and we do talk about this each and every year, so I'll go through it again. So at the start of an audit, we are required to establish the level of materiality for the financial statements. This achieves two things for us. First, it allows us to, it gives us the figure for which we will evaluate any corrections that are required to the financial statements that haven't been made, and we could still give a clean audit opinion for. And secondly, it sort of drives the level of testing and scoping that we do to achieve our objectives. So the higher level of materiality means we could accept more uncorrected errors, and also means likely we do less testing, and vice versa if it was lower. We set materiality based on professional standards, and for this type of organization, that requires us to set it at anywhere between 0.5% and 3% of revenues. So we've taken the city's 2022 consolidated revenues. We backed out the unusual item in last year for the Kitchener Power Innova transaction, and then computed what we thought materiality should be at around 2.3% of revenue, which gives us a figure of about $12 million. That's up over last year, but it's still well within the range and typical for what we would use for a larger a larger lower tier municipality in the province of Ontario. Oftentimes I get questions about that level of materiality, and people say, well, geez, $12 million is a big number, and we do agree that is a big number, but when we compare it against the total revenues or total expenses of the city, and we say, if your revenues were $12 million higher or $12 million lower, would somebody looking at your financial statements come to a different conclusion as to the size and scope of activities of the city? And when we look at it from that perspective, we think that's not the case. Furthermore, we do go much more granular than that. It's not that we don't look at things under that number, we actually do. And in fact, if we identify any errors or corrections that are required, we actually look at that number at 5% level of that. So now we're talking at something closer to $600,000. So again, much more precision. Any and all transactions of the city are subject to audit. None are scoped out completely. So the largest and the smallest could all be picked. Obviously, in a risk-based audit, we do look at the larger activities, but that doesn't mean anything else couldn't be picked along the way. Moving into the next section we refer to as audit scoping. And so this is where we look at the various components within the city that roll up into the financial statements. So obviously you've got the general operations of the city, but as you're aware, there are other entities that are consolidated. Those include the Center and the Square, Kitcher Library, the 2 business improvement areas, as well as your investment in Innova. And on the next slide, we do highlight the fact that we do perform full scope audits on each of those entities. Mostly, these are required under the Municipal Act, but in some cases, these are the choice of either the organization or the city itself. Furthermore, we do provide a special audit opinion on the revenues and expenses of the Gaswork enterprise. Here we've identified some of the major areas of focus in terms of the audit. We do look at all captions of financial statements, but we provide a bit of a snapshot here of some things that should be identified. And the first item I'll talk about directly, and that's the risk of override of controls. And we're required to classify this as a fraud risk under the audit standards. So that's not unique to the city. It's all audits of any financial statements in Canada. So what this means is that regardless of how good your internal control structure is, there may still be opportunities, incentives, or rationalizations to make fictitious and intentionally incorrect entries into the accounts to achieve some sort of outcome. So we're required to respond to this, even though we do think the risk is relatively low. And by doing so, we'll identify what we consider to be high risk or unusual entries into the accounts. And when we find those, we do a full deep dive on them to make sure there's nothing untoward going on. And I've discussed that on this page. Courtney?
Thanks, Matt. So I'll talk about some other areas of focus that we'll be looking at. The first area is post-employment benefits. The reason we are focusing on this area is due to it being an estimate with significant judgment used by management and management specialists. Additionally, there is complexity within the accounting guidance. Our procedures we'll be performing are communicating with management's actuarial specialist, which is Mandela's Actuarial. We'll assess the reasonableness of the assumptions within the calculation, as well as test the underlying data that is used in the calculation as well. The next area of focus is tangible capital assets. And this is an area of focus purely due to the size of the tangible capital assets. In 2022, it was close to $1.5 billion. Our procedures that we are going to be performing are substantive procedures of testing a sample of additions as well as any disposals, as well as we'll look at repairs and maintenance expenses and ensure that none of those should have been capitalized. Our next area of focus is the obligatory reserve fund revenue and deferred revenue. The reason we are focusing on this area is due to the revenue recognized from development charge reserve fund is subject to judgment, as capital projects must be growth related in nature. The procedures we perform on this will look at the collected development charges from the developers, as well as perform substantive testing over amounts being recognized as revenue and ensure that the related expenditure has been incurred. The last area of focus is new this year. So this is the asset retirement obligations. This is a new accounting standard under public sector accounting standards. The reason it's an area of focus is, one, because it is a new standard, but also because there is estimation uncertainty within the obligation. Some of the procedures that we will be doing over the obligation is reviewing management's accounting position over the new standard and ensuring it's appropriate and in compliance with the accounting standards. We'll do a sample of some of the assets that have an obligation attached to them and ensure that they are accurate and the obligation is appropriate. We'll also look at some of the assets that don't have an obligation attached to them and just make sure that that is appropriate and that no obligation should be attached. And then for this year, we will review the journal entries to record the initial liability. On the next page, I'll talk about the key milestones and deliverables. So currently, we've been doing some risk assessment and planning. In November, we will be doing our interim audit procedures. And then March 25th, we start the gasworks audit, and then April 1st, we start the main audit. And then in June, we will be finalizing and presenting to you again. After this is just the appendices that we have for your information. I won't go through them, but if anyone has any questions, we can take those now.
There don't appear to be any so far.
Perfect.
No? Nope. I think we're good.
Perfect. Thank
Okay,
you.
thank you so much.
Thank you guys. Appreciate all of the ongoing efforts and work in regards to this, and look forward to all of the work that's coming ahead.
Okay.
Wonderful. Thank you very much. Okay, moving on then. We'll move on to item 5.1, which is the third quarter audit status report. And I will turn it over to Ms. Tasker.
Great. Good afternoon, everyone. Oops. Oh, there we go. Perfect. All right, so today I just have one audit to share with you, and that is the controls audit of accounting and payroll processes. Also in progress right now is a process review of external billable work orders and the ongoing review of training documentation. So this audit is part of my list of recurring controls and compliance audits and has been done previously in 2016 and 2019. The objective is to document and test controls related to accounting and payroll processes and to ensure assets are protected from fraud, theft, and error. The scope includes areas previously tested, such as field orders, perked invoices, journal entries, duplicate payments, and payroll controls. It also includes 2 new areas related to concur controls and reports and bank reconciliations, as well as any emerging risks identified by staff. The methodology included reviewing the previous audit recommendations coupled with staff interviews to document the current processes. This was then followed by testing random samples of transactions in a number of areas. So I'll now go through the observations and findings from each of the topic areas, and the findings and recommendations have been shared with the relevant staff, and a status update will occur 1 year from now. So the first topic is a new one that's related to SAP Concur software that was implemented to replace our paper employee expense forms. The system has several built-in controls in place to check for things like missing receipts or business purpose, ineligible expense types, etc. The online routing of expenses goes through these automated checks and then to the supervisor and then an accounting analyst for higher risk expense categories. Therefore, the risk of reimbursing ineligible expenses is quite small. Management is responsible for expenses hitting their budget and should be verifying the expenses submitted are valid. One of the recommendations is for accounting to utilize various concur reports to ensure adequate management oversight and compliance. And other reports can be used to monitor spending patterns and identify potential fraud. It is also recommended that accounting periodically remind approvers to always review the receipt detail for any expenses that they approve. This will better ensure that expenses are valid business purchases and goods or services are not being purchased for personal reasons. The next topic relates to field orders and perked invoices for expenses less than $3,000. This was originally noted as a high-risk category of purchases, since these methods of purchase have no management approval path within SAP. Recommendations were made to eliminate perked invoices and add an approval path for field orders. However, this has not yet been implemented. I was advised, however, that a new module called SAP Concur Invoice will be implemented in 2025, which will replace the field orders and perked invoices and operate the same way that SAP Concur does, with automated controls and an approval path. Therefore, I have no new recommendations in this area, but once the new software is installed, these transactions may be subject to testing. The next topic is journal entries, and for those of you who are unfamiliar with them, they are accounting entries made to the general ledger to move amounts from one account to another. It is important to have controls around this function to ensure no one moves expenses to hide them from view or write off amounts in order to cover fraudulent behavior. The process itself has requirements for management approval of all entries and central storage of backup to support each one. My testing included a random sample of entries from all journal entry preparers for the past year. 28% of the sample did not have sufficient backup for me to understand the intent of the entry. Only one did not have management approval, as it was missing entirely from the storage location. When questioned about the entries, the management approvers indicated that the entries were either small dollars or routine, and therefore they knew what they were when they approved them and didn't require additional backup. A reminder has been given to approvers, however, to make sure to review all entries and to require backup to support the entries. The next topic is duplicate payments, and these can occur if an employee purchases something on their corporate visa, but the vendor also sends an invoice, which may or may not show the visa payment. The invoice can get sent to accounts payable and paid in error. Sometimes the vendor is truthful and will return or reverse the duplicate payment, but not always. So the testing during this audit only found one duplicate payment. However, the vendor had already reversed the visa transaction. So no action was required on our part to recover any funds. There are several payroll controls which were tested. The primary control is to ensure that no one has the ability to set up employees, make changes to salary, and remove employees from the payroll without oversight. A review of access levels found that several people had more access to PeopleSoft than required. They had the ability to edit and change pay rates and step when they only needed view access, and this has been remedied. A control weakness was identified by staff related to oversight of pay rate changes in PeopleSoft. While I don't want to get into the details of this vulnerability here, I can assure you that the relevant staff have been alerted and a recommended solution provided to them. The testing involved random samples of retroactive payments, off-cycle payments, and sick leave payments. Each requires certain backup and calculations and management approval. On review, 19% did not have sufficient backup. While many of these were eventually found on local drives, staff were reminded to ensure all backup is stored in a central shared location for easy retrieval and review. No fraudulent transactions were found, however. Bank reconciliations are a new topic which was not tested before. Staff prepare a reconciliation between the city's bank account statements and the associated accounts in the general ledger in SAP. Previously, due to staff shortages, the reconciliations were not up to date, resulting in a single case of theft of cash by staff that went undetected for a while. A full investigation was launched and appropriate actions were taken to ensure this does not occur in the future. Testing revealed the reconciliations are now up to date, but there are still several outstanding items still to be investigated and resolved. The one issue identified by staff was with the debit and credit card account. Normally, there would always be a timing difference between the transactions in the general ledger and when they hit the bank account. A report would be run to account for the difference and the account would balance. Due to a vacancy in the revenue division that deals with deposit allocations, the account has not balanced recently. Staff are working to determine the root cause and get the account back into balance. So I'll be following up with accounting staff next month to ensure that this gets resolved. The final topic is any emerging risks which staff identified during their interviews with them. First, they noted several areas across the corporation have added in various payment systems without always involving accounting. This leads to difficulties with the systems integrating with SAP and/or providing the right level of detail to the general ledger to allow for automatic account reconciliation. This has meant a lot of extra effort by accounting staff to manually match transactions in order to reconcile. It is recommended that accounting get added to the list of approvers in the technology solution assessment process whenever an idea involves payment to the city. Management should also be made aware of the issues that this causes when they procure software without input from accounting. Second, they noted that we lack formal treasury policies. This has led to inconsistencies across divisions, such as the types of payments that service areas accept from customers, whether they charge credit card fees or not, etc. It is recommended that finance staff develop such policies. And benchmarking was done as part of this review, and examples of possible policy content has been provided to staff as a starting point. In conclusion, none of the testing found any evidence of fraud, and controls are generally strong to protect the city from fraud, theft, or error. Transaction backup to substantiate entries was missing in some cases, and staff have been reminded to do a better job of record keeping. As mentioned, the two biggest issues which need to be resolved include the identified payroll control weakness and the inability to reconcile the debit and credit card account. All of the recommendations to staff focus on strengthening controls even further to minimize opportunities for theft. Are there any questions?
Any questions? There do not appear to be any. You did such a great job explaining. Oh, sorry, Councillor Chapman does have a question.
Yeah.
Go ahead, Councillor Chapman.
I just wondered if you had any dollar amounts attached to some of the concerns that you presented.
Specifically, which items were you?
Well, like when it came to the payroll problems or the reconciling of the different, the Visa and the ledger.
I don't have them off the top of my head, but I could provide them afterwards if you'd like.
Like, are we talking a couple $100s or thousands of dollars? Or?
It would be more in the thousands. The debit and credit card account is where all of our debit and credit card transactions go through, so it's quite a bit of money going through. It's not that it's missing, it's just that it's not reconciling with the bank statements.
Okay, thank you.
Okay, any other questions? Okay, there being none. Is that it, Ms. Tasker?
That's it.
That's it. Wonderful. Thank you. I do need to go back, though, to item 4.1. I forgot to take the motion on the audit planning report. Somebody want to move that? Councillor Davey, seconded by Councillor Johnson. All those in favor? Opposed? That's carried. And motion to adjourn. Councillor Chapman, Councillor Ioannidis, all those in favor? Opposed? That's carried. Folks, we'll go into special council. It's advertised for 5:30, but what we'll do is we'll just take a motion to start early. Or what's the motion that I officially need? Waive notice to start early? Okay. So when you're ready, I'll start the next meeting. Madam Clerk.